Okay, so welcome to the deep dive, and today we're going to be talking about something that is just dominating the headlines right now, and it's this kind of trade war that seems to be heating up between the U.S. and China, and specifically we're going to be looking at these new tariff threats that are going back and forth. All right, so let's just jump right into it then. This U.S.-China tariff escalation, it seems like things are getting really, really tense right now. I mean, we're talking about, the threat from the U.S. to slap on an additional 50% tariff on all Chinese imports. And this could happen like as soon as April 9th, 2025. But that's only if China doesn't reverse its own 34% retaliatory tariff that it already has in place. And then on top of all of that, you have to remember that there were already tariffs in place before this. I mean, there was that initial 20% tariff and then the 34% tariff that Trump put in place a while back. So, I mean, it feels like we're just stacking tariffs on top of tariffs on top of tariffs. It's like they're building this tariff skyscraper. And the question is, how high can this thing go before it just collapses? Like, what does all of this stacking of tariffs actually mean?
Well, I think what's really important here is not just like the specific percentage points, but the fact that this is such a deliberate escalation and the language coming from both sides is so strong. It's almost unprecedented. It feels like there's like a real shift happening in how these two countries are interacting with each other economically. The Guardian points out that China's response has been very, very firm. They've called these actions by the U.S. blackmail. They've said that they're going to fight to the end. They said that they will resolutely take countermeasures. This isn't just like normal diplomatic back and forth. There's like a real edge to their words this time.
Yeah, and I mean, the Genoa editorial, they took things even further. They were calling the logic coming from the U.S. utterly absurd and naked extortion. I mean, talk about blunts. And then you have the Chinese Foreign Ministry sharing that old Reagan speech from 1987 where he was criticizing tariffs. The paper was reporting on that, and they were saying, this speech has like a whole new meaning in 2025. And that's a pretty powerful move rhetorically, reminding everyone that the U.S. used to have a very different stance on this whole issue of trade barriers. I mean, it really underscores just how much the global trade landscape has changed.
Yeah, it really does. And I think Wen Sung from the Atlantic Council, he had this really interesting way of looking at all of this. He was basically describing it as a game of chicken. Like neither side wants to be the one to back down first because, they're worried about how that's going to look internationally. They're worried about losing face. And they're also worried about, the economic consequences domestically if they back down. So it's like this high stakes standoff where, nobody wants to blink first because that could be seen as a sign of weakness.
Yeah. And it really feels like China in particular is really trying to show the world that the global order is no longer unipolar, that it's now what's so-called bipolar. And they're not just going to let the U.S. kind of call all the shots anymore. And you can really see this in their response. I mean, they're very clearly asserting their global influence here. But what's interesting is the Guardian also reported that Asian markets have actually recovered a bit after that initial dip that they took when all this news first broke. And that kind of suggests that, the financial world is trying to figure out, where they stand in all of this uncertainty. But that's also a pretty big contrast to what Bill Ackman has been saying. I mean, he's calling for a complete moratorium on all tariffs. So clearly there's a lot of debate about, what the best path forward is right now.
And it's important to remember that, all of this is happening within a broader context. I mean, these actions by the U.S. are not happening in a vacuum. The Guardian also touches on how other countries around the world are reacting to, these wider U.S. tariff policies. I mean, you have the European Union, for example. They're proposing to put their own counter tariffs on American goods, things like soybeans and nuts. But at the same time, they're also saying that they're open to negotiation. And then you have Taiwan, who's facing a pretty substantial reciprocal tariff from the U.S. They've also said that they're willing to negotiate, and they've even suggested a zero tariffs agreement. So, this really shows that this U.S.-China tension is really just one part of this much larger kind of global trade anxiety. It feels like there are all of these potential realignments happening on the global stage right now.
Yeah. It's a really complicated situation for sure. So, okay, we have all this trade friction brewing, but let's zoom in now and look at one specific industry that seems like it's going to be particularly vulnerable to all of this, the automotive sector. And the CNBC transcript lays out some pretty dramatic potential consequences here.
Yeah, what's really striking is that CNBC is reporting that the U.S. is going to put a 25% tariff on all cars that are not made in the U.S. And not only that, but they're also going to put tariffs on all auto parts as well. And this could go into effect as early as next week. Some of the industry experts that CNBC spoke to, they were saying that this is like the unthinkable has happened. They're saying that this could basically wipe out like 30 years of free trade in North America,
Yeah.
just like that. And I mean, they're even predicting that we could see a recession in the auto industry. And that's a pretty serious warning.
Yeah, it definitely is. And it seems like the most immediate impact for the average consumer is just that cars are going to get a lot more expensive. And we might even see certain models just completely disappear from the market. And I mean, CNBC is estimating that sales could fall by somewhere between 2.5 to over 3 million vehicles. I mean, that's a huge hit.
Yeah, it is. And the CNBC transcript goes into some detail about just how difficult it would be to move car production to the US. I mean, first of all, it would take a lot of time. Like, we're talking 2 to 3 years just to build a new factory from scratch. And even if you're just retooling an existing assembly line, that could still take months. And then on top of that, you have to consider the costs involved. I mean, we're talking billions of dollars to build a new factory, and even just to set up a new assembly line could cost $500 million. And then you have to think about all the suppliers. I mean, car companies would have to find all new suppliers if they're moving production to the US. And there's a real risk that, a lot of the smaller suppliers in that global supply chain could go bankrupt. And, the CNBC transcript really drives home this point that the US just doesn't have the infrastructure right now to produce very cheap cars domestically. And I think that's really important to understand because it explains why these tariffs are very likely going to lead to price increases for consumers.
Yeah, it's not like you can just snap your fingers and suddenly start building all these cars here in the U.S.
Yeah.
And it's kind of shocking to think about just how reliant we are on imported vehicles and parts. I mean, even for car companies that we think of as being American. Like CNBC was saying that Ford and Stellantis, something like 74 to 80% of the vehicles that they sell in the U.S. are actually made here. But for GM, it's less than half.
Yeah.
And then, the really crucial point that the Wall Street Journal video makes is that even if a car is assembled in the U.S., it's still going to be hit by those tariffs because so many of the parts are imported. So even if the final assembly happens here, all those individual components are still coming from somewhere else. And this really shows just how globalized the auto industry has become.
Yeah. And they had this great example in the Wall Street Journal video. They were talking about the Ford F-150. I mean, you think of that as like an American truck, right? But the alternator comes from Mexico. The half shafts come from Canada. The tires come from Korea. The wheels come from Mexico. I mean, it just shows you how many different countries can be involved in making even a single vehicle. And then you have the USMCA, that's the United States-Mexico-Canada agreement. And the Wall Street Journal was pointing out that this actually adds like a whole other layer of complexity to all of this. Because right now it seems like parts that are coming from Canada and Mexico might actually be exempt from those tariffs, at least for the time being. But that could change, once they figure out a more specific process for dealing with non-U.S. content. So it's all very much up in the air.
Yeah, and they had this other example in the Wall Street Journal video. It's about a transmission that's made by this Canadian company called Linamar. And apparently this transmission crosses the border like 7 times before it's finally installed in a car that's sold in the U.S. I mean, that just goes to show you just how complex these supply chains really are. It's not just about where the final assembly happens. You have all these parts that are crisscrossing borders multiple times. And even if we did somehow manage to shift a lot of car manufacturing back to the U.S., the Wall Street Journal was reminding us that all those raw materials like steel and aluminum, they would still be subject to those tariffs that Trump put in place a while back.
Right, exactly.
And the Wall Street Journal cites this estimate from Cox Automotive. They're saying that all these tariffs could add up to like thousands of dollars to the price of a U.S.-made car. I mean, they said potentially $3,000 just from the tariffs on parts coming from Canada and Mexico, and then another $3,000 on parts from other foreign countries. And then on top of that, you have to factor in like $400 from the tariffs on steel and aluminum. And I mean, that's not even taking into account any potential retaliatory tariffs or, any other tariffs that might be put in place. So, we're talking about a significant increase in the cost of cars, and that could have a real knock-on effect when it comes to things like car loan defaults. And CNBC was reporting that, default rates are already pretty high. Like 6.6% of subprime borrowers were more than 60 days behind on their payments back in January of 2025. And all of this is happening at a time when the average price of a new car is already close to $50,000. And the expectation is that that number is only going to go up.
So basically, we're looking at a situation where cars are going to get a lot more expensive and a lot more people are going to have trouble affording them. And the CNBC transcript actually points out some specific car models that are especially vulnerable. Like they said, some models could actually be wiped out because they're mainly manufactured in Mexico or South Korea.
Yeah.
And they were talking about cars like the Chevy Trax, the Trailblazer, the Nissan Sentra, the Kicks, and even some Ford models like the Bronco Sport and the Maverick. But it's not just those more affordable cars that are at risk, is it?
No, not at all. I mean, even popular models like the Toyota RAV4 and the Honda CR-V, they're likely to be affected as well. That's according to CNBC at least. And, if the supply of new cars goes down, that could also lead to a rise in used car prices. So it's really a domino effect.
Right.
Now, it's interesting, though, because the Wall Street Journal also pointed out that the United Auto Workers Union, they're actually in favor of these tariffs. They're hoping that this will lead to, more manufacturing jobs coming back to the U.S. and, hopefully more union jobs. But it seems like, the broader message coming from the auto industry is that what they really need is some kind of certainty and stability when it comes to trade policy. Because without that, it's really hard for them to make long-term investment decisions. And the Wall Street Journal uses this term soft waste to describe all the inefficiencies that are created by this uncertainty around tariffs, things like warehousing costs and, just all the time and energy that's wasted trying to figure out, what's going to happen next. And I think the Wall Street Journal also makes this really great point, which is that, while we're all focused on these tariffs, there's this other really big shift happening in the auto industry. And that's that China is now the world's largest exporter of vehicles.
Yeah. It's like while we're busy arguing about tariffs, the whole game is changing right in front of us.
Exactly. All right, so let's shift gears a little bit now and talk about that big picture perspective on tariffs and the global order. And for this, we're going to be looking at that analysis from money and macro. And this is where things get really interesting because it seems like they're arguing that this goes way beyond just a normal trade dispute.
Yeah, I mean, this money and macro analysis is really fascinating. They're suggesting that the tariffs that the Trump administration has put in place are not just about, tweaking trade here and there. They're saying that this is part of a much bigger plan to basically restructure the entire global trade system. And they point to the influence of these new economic advisors that Trump has brought in. People like Scott Bessent, he's the Treasury Secretary, and Stephen Marin, who's one of his economic advisors. And they're saying that these guys are really focused on this issue of deindustrialization in the U.S.
Yeah, and deindustrialization, that's basically the decline in manufacturing as a share of the overall economy. That seems to be a really central concern for this administration. And their goal is very clearly to bring manufacturing back to the U.S. And Money and Macro points out that there's been this huge drop in U.S. manufacturing value added. I mean, it's 28% back in the 1950s, and now it's only around 10%. And it seems like there are two main reasons why they're so focused on this. First of all, there's the political aspect. I mean, those industrial heartland states that were so important to Trump's election, they've been hit really hard by this decline in manufacturing. So there's a lot of political pressure to bring those jobs back. But then there's also the strategic aspect. I mean, the U.S. is losing its industrial edge relative to China, and that has real implications for national security, especially when you consider that in a time of war, a lot of military equipment would have to be produced by those same factories that are making civilian goods. I mean, they've even brought up the hypothetical example of a Chinese invasion of Taiwan, and they pointed out that China has a huge advantage when it comes to shipbuilding. So, they're really highlighting this industrial imbalance between the U.S. and China.
Yeah, and that China factor is really key to their whole argument. I mean, from their perspective, this isn't just about creating jobs in the U.S. It's about restoring America's ability to stand on its own 2 feet. It's about strategic independence. And that's where they bring in this idea of green, yellow, and red buckets for different countries. They're basically saying that in the future, the global order is going to be divided into these different tiers. And depending on which bucket a country falls into, they'll have a different kind of relationship with the U.S. Some countries will have really favorable trade deals and strong military protection from the U.S., and they'll have easy access to the U.S. dollar. And then other countries will be kind of on the outside looking in. So it's a very different vision of how the global order could work.
Yeah, it sounds like a pretty radical reimagining of how global alliances and trade work. And then Money and Macro goes on to kind of walk us through some of the history of these different global orders that the U.S. has led, starting with the Bretton Woods system after World War II. And that was based on, fixed exchange rates and the U.S. providing security guarantees for its allies and helping them rebuild their industries. And then after that came the neoliberal order, which was all about lowering tariffs and promoting free trade and allowing for more flexible exchange rates. But throughout both of these eras, the U.S. dollar has been the world's reserve currency. It's had
what they call the exorbitant privilege.
And what I thought was really insightful was how they explained how both of those systems ultimately broke down. Like with Bretton Woods, they talked about the Triffin dilemma, which is basically that as the global economy grew, it needed more US dollars in circulation. But that ultimately undermined the dollar's value relative to gold, and that's what led to the collapse of the Bretton Woods system. And then the neoliberal order, on the surface, it seemed like it was really benefiting the U.S. The dollar was strong. We had access to all these cheap goods from around the world. But at the same time, it also contributed to the very problems that this administration is now trying to fix. Deindustrialization, rising inequality, what some people call the China shock.
So it seems like, according to Money and Macro, the Trump team has this three-stage plan to create this new global order. And the first stage is what they call tariff chaos. And that's what we're seeing right now. You're using these really high tariffs to try to get leverage in negotiations with other countries. And then stage 2 is what they call reciprocal tariffs. And the goal there is to eventually create a system where tariffs between any two countries are always equal. And their thinking is that this would somehow lead to fair trade practices. And then the final stage, the ultimate goal, is something they're calling the Mar-a-Lago Accords. And this is where things get really interesting, because they're talking about some kind of new global currency agreement. Maybe a system where other countries peg their currencies to the US dollar, but it would be a managed dollar this time. And in exchange for doing that, they would get all these benefits like favorable trade deals and security guarantees from the US. And they might even have to pay for that security. This is a really ambitious plan.
Yeah, it's hugely ambitious. And the idea is that they could weaken the US dollar just enough to make American manufacturing more competitive again. But at the same time, they want to make sure that the dollar remains the world's reserve currency. So it's a really delicate balancing act. And as Money and Macro points out, there are some really big questions about all of this. Like, will other countries actually agree to go along with this plan? And even if they do, will they trust the U.S. enough to make it work? Especially given, how unpredictable U.S. trade policy has been lately. I mean, even close allies have been hit with tariffs. So it's all very uncertain. But the point is that, even though this seems like it's all about high-level international finance, it could actually have a real impact on everyone's lives. I mean, it could affect everything from the value of the money in your pocket to the price of the things you buy at the store.
So let's sum all of this up for our listeners. We're basically in the middle of this very tense trade war between the U.S. and China, and things could escalate even further. We can see even more tariffs put in place. And it's very likely that this is going to lead to higher prices for cars and other goods, and there's a good chance that the auto industry in particular is going to be disrupted because, those supply chains are so global and so complex. But maybe the most important takeaway here is that all of this might be about something much bigger than just trade. It might be part of this really ambitious plan to completely reshape the global economic order. And, it's not clear whether that plan will actually work, but it's something that we all need to be paying attention to.
Yeah, and this brings up a really important question that I'd like everyone listening to think about. Beyond the immediate impact that all of this is going to have on our daily lives, things like how much our cars are going to cost, what do you think the long-term consequences of all this are going to be? Not just for individuals, but for international relations as a whole. And, we should be thinking about that regardless of whether this plan to create a new global order actually succeeds or not. I mean, it really forces us to grapple with this fundamental tension between, the desire to promote national economic interests and the reality that the global economy is so interconnected.
Absolutely. And, we really encourage you to keep following all the news and analysis on this as it develops, because this is a really dynamic situation and it's changing all the time. So thank you for joining us for this deep dive. We'll see you next time.